Hi everyone. Today we are going to discuss Elecon Engineering Company Fundamental Analysis. This is part 2. Here we are going to discuss financial ratios analysis, dividend analysis and shareholding analysis. Already we discussed 10 years annual results and introduction of the company and last 4 quarter results in the previous video. Please go through previous video before going through this video. Here we will discuss financial ratios analysis. For that purpose, we open screener. Current market cap of Elecon Engineering is 9,794 crores. That means this is a mid cap company. First we will see ROCE. So ROCE 3 years is 17.8% and ROCE of current year is 24.9%. It's improved. This is positive sign. Here ROE 3 years is 14.5% and current 20.5%. Here also improved. This is a positive sign. Here debt to equity is 0.03. That means this is zero debt company. This is a positive sign. Now see sales. Year on year quarter sales is 21.8% and profit is 44.1%. Here sales and profits are very good. This is a good sign. We will not consider quarter on quarter sales. So last 1 year sales here 25.1% and profit growth is 47.8%. This is also excellent. Later 3 year sales growth, that is 12% and profit growth is 38.3%. This is also good. And 5 years sales is 5.3% and profits are 99%. So profits are excellent but sales are flat. That's 7 years. 7 years sales are 2.5%. These are flat. And profits are 36%. These are good. Now I'll see the returns. So 1 day returns 3.4% and 1 week returns minus 9% and 1 month minus 14%. Here 3 months minus 4%. So if you see here up to 3 months, so returns are negative but results are positive. 6 months is 17%, 1 year 126%. So here last 1 year results are very good due to that one. So here returns also excellent. Here 120% up. Returns over 3 years 147%. This is also high. Returns over 5 years 69%. This is also high. Returns over 7 years 49%. Returns over 10 years 41%. Now we'll see if we invested 1 lakh rupees in Elecon Engineering, how much we'll get for 10 years. CAGR calculator. Here 1 lakh invested. So for 10 years. And here 30 lakhs, 31 lakhs, 32. If you see returns over 10 years 41.4%. Okay, so here, so if you invested 1 lakh rupees 10 years before in Elecon Engineering, current value is 32 lakhs. So that means 41.4% CAGR. So this is a multi-bagger stock. So if you invested 1 lakh rupees in Elecon Engineering last in 10 years before, current valuation is 32 lakhs. This is very good. So here promoter holding is 59.3%. So this is more than 50%. This is high. This is a good sign. Later change in promoter holding 0. That means they did not sell or buy anything recently. Then pledged percentage 0%. This is also positive sign. Now see free cash flows. So here current free cash flows 264 crores. This is positive sign. Here 209 crores. This is also positive. And free cash flow 3 years. This is also positive. Free cash flow for 5 years 1030 crores. This is also positive. 7 years 1262 crores. This is also positive. And 10 years here 1585 crores. This is also positive. If you observe free cash flows, so throughout all the years up to 10 years, so here free cash flows are positive. So that means, so they are spending for dividends and also capital expenditure, still they have free cash flows. So this is a positive sign. And here market cap to sales 5.4%. That means this is the medium. So what it tells, market cap to sales. For example, here sales is 1 rupee, then we are giving 5 rupees for that company. So that means here market cap to sales is 5.45. So this is a medium. Then dividend yield 0.20 percentage, dividend payout 9.45 percentage. So they are giving dividend every year, but here dividend payout is 9.45 percentage. These are less. That means they are getting more profits. They are giving less dividend. So that means they are holding all the profits for future growth. This is a positive sign. CWIP is 0.42 crores. They are not doing any capital expenditure recently, and also previous year also 0.51 crores. This is also very less. That means they are not doing capital expenditure in the recent years. Here price to book value is 6.92. This is little bit high. Now see PE. So 3 years PE is 23.6 and current PE is 30.6. So if we compare with current PE with 3 years PE, so little bit overvalued. But based on last 4 quarter results, so this PE is reasonable. Now we'll compare a few more things. Go to ratestar.in, go down. We'll check ROE, ROCE throughout 10 years. In 2014, ROE is 2.68 and ROC is 9%. So this is less. Here also 3%, 10%. This is also less. Here 5%, 11%. This is also less. 0.9%, 9.8%. This is also less. Here 0.6%, 6%. This is also less. Here 8%, 12%. This is also less. 10%, 7%. This is also less. So here if we observe ROE, so ROE throughout from 2014 to 2021, so ROE is less. So in 2022, ROE improved to 14%. Here in March 2023, so ROE improved to 20%. This is positive sign. So recent years ROE is improved and also ROC also improved to 17%, 25%. So up to 21, their ROE and ROCE are very less. So later it was improved. This is a positive sign. Now we'll see receivable days, inventory days. Receivable days in 2014 222 days. This is high. Here 2022 209, 190, 199. So later they're decreasing receivable days. That is positive sign. But still receivable days are high. Then here 202, 105 days. So in 2023 22, so here receivable days decreased to 138 days, then 90 days. So in 22 and 23 receivable days are improved drastically. So this is positive sign. And inventory days, so inventory days in 2014 98 days, now current 64 days. It was decreased from 98 days to 64 days. This is a positive sign. Payable days, it was decreased from 171 days to 123 days. Here they are paying their dues to vendors within 123 days. This is also positive sign. Now we'll see cash conversion cycle. So in 2014, cash conversion cycle is 150 days, 150 days, 126 days. So in the initial years, cash conversion cycle is high. This is negative sign. But later they improved to 97 days, then 125, 129, 122. So up to 2020, here cash conversion cycle days are high. So later improved to here negative minus 61 days, here minus 5 days, 31 days. Last 3 years they improved their cash conversion cycle. This is a positive sign. Later debt to equity, if you see here in 2014, debt to equity is 1.19, 1.03, 0.989. So here debt to equity is high, but they are reducing debt to equity constantly. Here 0.89 to 0.82, then 0.83, 0.7, 0.49, 0.3, 0.1, and currently in 2023 0. This in 2023 zero debt company. This is positive sign. Constantly they are decreasing their debt. So already we observed. So here throughout 10 years profits increase constantly throughout 10 years, and also here debt is decreasing constantly. This is positive sign. Now we'll see the dividends. Open BSC site. Here under corporate actions we have dividends. If you see here they started to give dividends in 2007. In 2007 they gave 1.5 rupee, here 1.5 rupee, 1.5 rupee, 1.5. Later in 2011 increased to 1.8. So here constant. Then later in 2011 increased to 1.8, 1.8. Later 2013 here decreased 1 rupee, 1 rupee. So here decreased. Then later increased to 1.1, 1.1. Later decreased to 0.5, then 0.2, 0.2. Then here from here it's increasing. And also if you observe here 2022 they gave 2 times, that is totally 1.4 rupees. So if what we observed based on dividends, so from 2007 onwards they are giving dividends continuously, and also so their dividend is increasing or constant only in like 2018 and 2019. Here they decreased their dividends. Remaining all the years dividend are increasing. In 2023 also they gave 3 rupees. So 2022 1.4 rupee, and then 2023 they gave 3 rupees. So from 2007 onwards they are giving dividends continuously, and also whenever it's possible they are increasing their dividends. So this is positive sign. What we observed based on this analysis already we discussed. So here throughout 10 years only 3 years their profits are down, remaining all the years their profits are increased. And also here they decrease their debt throughout 10 years, that is positive sign. Another one is here they are increasing their dividend or maintaining constant, and also they are giving dividends continuously, this is positive sign. So 3 combinations, one is profits are increasing, another one is debt is decreasing, another one is dividend is increasing. One more thing here, free cash flows. So throughout 10 years free cash flows are positive, and also free cash flows are increasing throughout 10 years, this is also positive. Now see price of Elecon Engineering 10 years price. So 10 years, so in 2014 price of Elecon Engineering is 28 rupees. In 2020 here 26, that means 2014 to 2020 here price is constant up to this period. So constant, price constant. So already we discussed, so they are giving good profits, but price constant throughout 2014 to 2020. Later from 2020 so their price increased. So in this period this is multi-bagger stock. So if anyone invested in 2014, so up to 2020 their invested amount is same, constant. So later 2020 to 24, so price increased drastically. Here it's a multi-bagger stock. So already we discussed, so in the last 10 years their profits are increasing, debt is decreasing, free cash flows are positive, but price is constant. So in this period we need to buy this type of companies. Later it gave multi-bagger returns. We'll go back a few more years. Here we will analyze price from 2006. So in 2006 price of Elecon Engineering is 12 rupees. So here from 2006 to 2008 price increased from 11 rupees to 323. So here 11 rupees to 323. Here very good. If you see here it was up from 11 rupees to 11 to 326. Later something happened here. So price decreased from 326 rupees to 32 rupees. Price decreased from 326 to 27 rupees. We need to find why this much drastic change. So 11 rupees to 326, and then 326 to 27. Remaining from 2009, from 2009 to 220. So here price is in the range of 26 rupees to 30 rupees. So here from 2019 to 2020 price is constant. This is horrible period. So price increased from 11 rupees to 326. So if anyone bought here, then price decreased 326 to 327 rupees. So this is horrible period. And then 2019 to 2020, here price is constant period, constant. So this is also horrible period. So from 2020 price increase. So here multi-bagger stock. So if you want to invest in any stock for long term, then we need to analyze at least 10 years. So if you observe this one, here 11 rupees to 326, this is the multi-bagger, but here horrible returns from 326 to 27 rupees. Then 2009 to 2020, here price is constant. So how many years? Approximately 11 years. So no returns. Then here 2020 to 24, price increase from 26 rupees to 1100. So here multi-bagger stock. So we need to find the reason here why price increase and down. Here any fundamental changes happened or any management issues. So it takes to recover this price, it takes 11 years. So here we need to observe carefully, otherwise we will struck in the overvalued stocks. Here current P is 30.6 and 3 years P is 23.6. So based on recent year results and improvement from 21 to 24, so here this is reasonable PE. What we observed based on Elecon Engineering results. So here free cash flows for 10 years positive for Elecon Engineering, and also it's a multi-bagger stock, and also dividends are increasing continuously, this is a positive sign. And also here debt is decreasing continuously, currently it's a zero debt company, that is a positive sign. And also cash conversion cycle improved from 2014 to 2023, that is also positive sign. So up to 2021 ROE and ROC are very less, later it improved from here 2.6% to 20.39% as ROE, and ROC improved from 9% to 25%, this is also positive sign. So if you want to invest for long term in any stock, so you need to analyze at least 10 years and we need to find positives and negatives. Later we need to decide to invest or not. So if you want to invest for long term in any stock, we need to use common sense. If you use common sense, then we'll make less mistakes. That's it for today. Thank you for watching. Have a nice day.